Is the UK on the brink of a recession, or have we already crossed that line? With rising inflation, soaring energy bills, and ongoing economic instability, many people are feeling the pressure. But what does a recession really mean? And how is it affecting everyday people, businesses, and the broader economy? In today's video, we'll explore whether the UK is officially in a recession, how we got here, and what the future might hold. Stay with me as we dig into the numbers, the reality on the ground, and what it all means for you. But first, let's understand the basics. What exactly is a recession, and how can we tell when we're in one? Simply put, a recession is a period of significant economic decline across the country, typically measured by a fall in gross domestic product, GDP, over 2 consecutive quarters. When economic activity slows down, businesses struggle, unemployment rises, and consumer spending drops. While GDP is the key indicator, recessions also lead to other consequences like increased inflation, higher unemployment, reduced consumer confidence, and lower levels of investment. So it's not just about numbers. It's about the real-world impact on people's lives. Now, why is there so much discussion about a recession in the UK? The UK officially entered a recession at the end of 2023, as the economy contracted during the final 2 quarters of the year. However, 2024 brought a surprising rebound in the first quarter, with GDP increasing by 0.7%, followed by 0.5% growth in the second quarter from April to June. Recent data from the Office for National Statistics, ONS, shows that GDP rose by 0.2% in August after stagnating in June and July. Despite these positive numbers, the ONS has cautioned that the broader picture reflects slower growth in recent months, signaling that while the economy is recovering, it remains fragile. As we look ahead, uncertainty still lingers, making it essential to monitor the UK's economic trajectory closely. Contributing factors to the UK's economic situation. Several key factors are contributing to the UK's economic situation. 1. Inflation. One of the biggest drivers of recession fears in the UK is inflation. Over the past year, inflation has surged to its highest levels in decades. Rising prices, particularly in essentials like food and energy, have squeezed household budgets across the country. The cost of living crisis has forced many people to cut back on spending, and when consumers stop spending, businesses suffer. Interestingly, UK inflation unexpectedly dropped to 1.7% in the year leading up to September, marking its lowest level in 3.5 years. This means the annual pace of price increases has now fallen below the Bank of England's 2% target, potentially paving the way for further interest rate cuts. The decline was primarily driven by lower airfares and petrol prices, according to official data. 2. Interest rates. To combat inflation, the Bank of England has raised interest rates multiple times. While this is intended to cool down the economy, it has also made borrowing more expensive for businesses and households. The rise in interest rates has hit mortgage holders and those with loans particularly hard, leaving less disposable income to fuel economic growth. Currently, UK interest rates stand at 5%. The Bank of England made its first rate cut in August 2024, but opted to keep rates unchanged in September. However, there is widespread expectation that another rate cut is likely in November. 3. Energy crisis. The energy crisis, exacerbated by geopolitical tensions and supply chain issues, has led to soaring energy bills. This affects not only individuals but also places a heavy burden on businesses, particularly small to medium-sized enterprises, SMEs, which rely on affordable energy to operate. 4. Political instability. The UK has experienced political turmoil, with changes in leadership and uncertainty around economic policy. Frequent government shifts and differing approaches to fiscal policy have left markets and investors anxious, adding to economic instability. According to the latest data, the UK has narrowly avoided a technical recession. The Office for National Statistics, ONS, has noted that while there has been some growth, it has been incredibly modest, essentially flatlining. This means that while we might not technically be in a recession, the economy remains extremely fragile. Even slight economic shocks could push the UK over the edge. However, just because it hasn't hit the technical definition of a recession doesn't mean people aren't feeling the effects. Many sectors are already struggling, and millions of people are grappling with higher prices and rising interest rates. Impact on everyday people and businesses. So, what does all this mean for everyday people? Whether the UK is officially in a recession or not, many are already feeling the effects of an economic downturn. Households. For many families, the rising cost of living has been devastating. With inflation outpacing wage growth, more people are struggling to make ends meet. Essentials like groceries, petrol, and utilities are more expensive than ever. The number of people relying on food banks has increased dramatically, and many are cutting back on everything from holidays to basic necessities. Businesses, small and medium-sized businesses, are often the hardest hit during a recession. Higher energy costs, coupled with reduced consumer spending, have forced many businesses to close or lay off staff. Larger companies are also feeling the strain, with many reducing investment or scaling back operations. Jobs and employment. Recessions often lead to higher unemployment rates. While the UK's unemployment rate remains relatively low at the moment, there are signs that job growth is slowing. Companies are hesitant to hire, and some industries, particularly retail, hospitality, and manufacturing, are already seeing layoffs. Housing market. Higher interest rates have cooled the housing market, and many homeowners are now struggling to afford their mortgages. Those looking to buy are finding it harder to secure a mortgage, while those on variable rate mortgages are seeing their monthly payments increase significantly. We'd love to hear your perspective. How has the current economic climate affected you or your business? Share your thoughts in the comments, and let's engage in a thoughtful discussion. If you found this analysis valuable, please like the video and subscribe to stay updated on the UK economy and its broader impacts. We provide in-depth coverage of current events and economic trends to keep you informed. The UK government and the Bank of England have been attempting to manage the economic slowdown with various policies aimed at tackling inflation and supporting growth. However, growing criticism suggests that these measures may not be enough to stave off a recession. The government has introduced a range of cost of living measures, including energy price caps and direct support for low-income households. However, many see these as short-term solutions to a much deeper economic problem. Looking ahead, the outlook for 2024 remains uncertain. Economists are split on whether the UK will enter a full-blown recession, but many agree that economic growth will remain sluggish at best. Much depends on how quickly the Bank of England can bring inflation down without causing further harm to the economy. Given the uncertainty surrounding the UK economy in 2024, it's wise to start preparing for the possibility of a recession. Here are a few steps you can take to protect yourself and your finances. 1. Build an emergency fund. If you haven't already, now is the time to build up an emergency savings fund. Aim to save at least 3 to 6 months' worth of living expenses to provide a buffer in case of job loss or reduced income. 2. Cut unnecessary spending. Review your budget and reduce any non-essential expenses. This will help you build up savings and avoid unnecessary debt. 3. Diversify your income. If possible, look for ways to diversify your income streams, whether through part-time work, freelancing, or passive income sources. Having multiple income streams can provide a safety net during uncertain economic times. 4. Avoid high-interest debt. Try to pay down any high-interest debt, such as credit cards or loans, as quickly as possible. With interest rates expected to remain high, debt could become more expensive to manage. By taking these steps, you can help protect yourself and your family from the worst effects of a recession. So, is the UK in a recession in 2024? While the country slipped into recession at the end of 2023, Early 2024 brought signs of recovery with moderate GDP growth. However, despite this rebound, the economic outlook remains fragile. Slower growth trends, inflationary pressures, and high interest rates continue to affect both businesses and households, raising concerns about the sustainability of this recovery. Want to understand who really suffers the most during an economic downturn? In my video, Recession Reality, who truly bears the brunt? I explore how recessions impact different groups, from families struggling with unemployment to businesses trying to stay afloat. We'll look at historical recessions and the real reasons behind these economic crises. Click the link to watch now and get a deeper understanding of who truly shoulders the burden when the economy collapses.